Good evening to you. Welcome to the Business News here on News 360. My name is Alfred. Let's go into our first story this evening. The International Monetary Fund says Ghana is still a high-risk debt distress economy. Head of the IMF mission to Ghana, Asiedu-Dartey, made this known in an interaction with journalists ahead of the official release of Ghana's performance under the third review of the program. The head of the IMF mission to Ghana, Asiedu-Dartey, was responding to a request by journalists ahead of the official release of its staff report sent to its executive board, requesting it to pass Ghana's performance under the third review of the program. In a Skype conversation with journalists from Washington, he advised government to remain cautious about its borrowing in reaction to comments made by Finance Minister Setekpe that Ghana will continue to resort to the Eurobond market. Asiedu-Dartey described Ghana as a high risk of debt distress economy. The IMF is also projecting Ghana will end the year with a debt to GDP ratio of 68% from 72% in 2015. The firm also revised the end of year fiscal deficit target from 4.5% to around 5% on account of weak revenue performance due to dwindling commodity prices on the world market.
In terms of progress, one of the key objectives of the program was to reduce the fiscal deficit and bring the debt accumulation down. And on this front, the authorities have made quite substantial progress. We project this year the fiscal deficit to be about 5% of GDP lower than 2 years ago. This is a major achievement that we don't see in many countries in such a period of time. This was absolutely needed because of the rapid debt accumulation that we have seen in recent years. But still, this is really a great achievement. And as a result, we expect the debt ratio to GDP to decline this year for the first time.
The IMF said Ghana will need to institute more structural reforms to make the overall business environment more convenient. The fund recently approved the third tranche of $116 million to help in the country's continuing recovery. Now, the head of the commercial banking at Stanbic Bank, Abdul Jalil Hussein, says physical barriers continue to hinder intra-Africa trade and is also a disincentive to business looking to operate in Africa. He made these remarks at the West African Trans-Regional Conference here in Accra.
The West Africa Trans-Regional Conference is a platform created by the Standard Bank Group for its commercial banking clients and business entrepreneurs with an overview of opportunities in West Africa. The conference targets potential investors with keen interest in expanding their operations and partnering other businesses in West Africa. Various speakers from Nigeria, Ghana and Angola highlighted current challenges economies have suffered from declining oil prices, unstable power, high cost of credit and taxes.
It is our interest to make sure that we highlight any issues. We try and resolve issues the best way we know how to do it, and that is working with entrepreneurs and working with government.
Standard Bank believes such conferences help the bank in fulfilling its vision of playing a key role in Africa's growth and also demonstrate the bank's commitment to commercial businesses and entrepreneurship.
Make sure that entrepreneurs across the continent are exposed to opportunities in markets that they might want to operate in but don't have enough information to do so. We operate in 20 countries, and therefore we have got what it takes to honestly bring entrepreneurs across the continent, connect with one another with a view to have your enterprises thrive and trade into these new territories that you might be getting into.
Standard Bank Group has a strong footing in Africa with local insights and cross-border capabilities to help clients explore the opportunities in oil and gas, agribusiness, telecommunications and the power sector.
A lot of banks don't have access to long-term financing, but we are lucky to be supported by a very strong parent. We are part of the Standard Bank Group and we have access to huge long-term financing. So doing facilities for 5-7 years, project financing is something that we pride ourselves in, which we understand that the current market situation doesn't allow a lot of other banks to do.
The Standard Bank has been around for 153 years. The bank is Africa's largest, operating in 20 countries with a reported asset of $128 billion.